Welcome back to Galaxy Grid. As always, I'm Alex Thorne, head of firm-wide research at Galaxy. I'm joined this week by Zach Picorni, Lucas Chayan, and Jianing Wu from Galaxy Research. Hey, everyone. Happy Monday.
Happy Monday.
Well, I mean, the hangover from the market structure bill is one thing that we'll talk about, and how Coinbase backed out and led to the now postponement of the key hearing that was to occur last Thursday. We'll also talk about World Liberty Financial, the DeFi application affiliated with the Trump family. Rather than go with Aave, the major lending app for its technology, has instead, contrary to some prior governance votes, chosen Dolomite, and we'll talk about what that means for both World Liberty and for governance in general. Also, this was an interesting one last week. A lot of people confused by this, but I think Lucas will set us straight as to why it might make sense. Bitmine, the mostly Ethereum DAT, although it does own Bitcoin, chaired by Tom Lee, has invested $200 million into Beast Industries, which is, I guess, the company business affiliated with MrBeast, the world's largest online content creator. What is an Ethereum DAT doing investing in a YouTuber? We'll ask Lucas to explain it to us. And finally, Jianing Wu is going to talk about how Jefferies, the investment bank, is removing Bitcoin allocation from one of its model portfolios and swapping in gold, supposedly due to what Jefferies sees as the risk to Bitcoin posed by quantum. Before we get to all of that, I need to remind you to please refer to the link to the disclaimer in the show notes, and note that none of the information in this show constitutes investment advice or an offer, recommendation, or solicitation by Galaxy or any of its affiliates to buy or sell any securities. Whew. It's going to be a good one. It's a short week technically today as we record on Monday, January 19th. Is a holiday. It is a federal holiday in honor of Dr. Martin Luther King Jr. Rest in peace. We're still here recording. You won't hear this, I think, until the earliest, until Tuesday, January 20th. But markets, U.S. markets are not open as we record this. So everything looks frozen, but crypto's open the week down, mostly on new Trump tariff news, I guess this time related to Greenland, the Greenland issue. Just real quick, what are people's takes on this? I see gold made new all-time highs last night, though.
It just seems like every time I open Twitter these days, it's just like a chart of silver or some random metal ripping, and Bitcoin just being like, oh, there was another $500 million of liquidations in the last 24 hours. So there was a whole lot of that this weekend, at least on my feed.
I agree. It's like we go up a little bit and then we just liquidate everybody because, per usual, we're just a leverage-driven industry still. But I think we're seeing good accumulation, and these are just temporary headlines. The market's maybe a little bit shaky, but overall, I've been very happy with the way that crypto has been trading, given how bad it's been the past few months.
Yeah, I think I saw the price drop down to 92,000 level, and then now it's recovering back a little bit. So I think Bitcoin is stabilizing among all of this geopolitical news is good news. But interesting stat is that gold last year had 69% gain, whereas Bitcoin was 6% down. So just putting the stats out there.
Well, maybe Bitcoin has room to catch up. The headline on Bloomberg today says Bitcoin falls below 92K as tariff fears weigh on risk assets, yet hedging assets like gold made new all-time highs. Let's hop right into it. Last week, I gave an overly extended monologue about the crypto market structure bill, though that was, I think, the biggest story for most of last week. After we recorded, leading into Thursday, when a Senate Banking Committee hearing, a key hearing, was supposed to occur, where we would find out if this bill really has bipartisan support. Before that hearing on Wednesday night, Brian Armstrong, CEO of Coinbase, publicly withdrew support for the bill. And he listed several factors, including stablecoin yield. It's become quite clear that the compromise sought on stablecoin yield, again, whether or not a stablecoin issuer through some form or another can pass through rewards to either token holders or possibly partners in the case of a B2B relationship, whether they can do that whether they cannot do that, or whether they can partially do that, has been a key sticking point. The Genius Act, you may recall, the consensus of the language in the Genius Act, which is the stablecoin law passed into law last July, seemed to say that they could not pass the rewards or yield or interest, born from the collateral that they hold to back the stablecoin directly to token holders. But the consensus also seemed to be that stablecoin issuers could use revenue of theirs in other ways to incentivize and reward. And there was a compromise in last Monday night's discussion draft that basically said that. It said that stablecoin issuers could not reward holders solely for holding, right? So you couldn't just sit on your stablecoins and get yield past airdrop down to you. But that they could use rewards or revenues to incentivize other activity-based behaviors, opening an account, sending a transfer, doing a settlement. And that seemed to be a pretty good, I think, solution and compromise from the crypto industry standpoint. But later in the week, it seemed that the banking lobby had been pressing for more restrictions. And ultimately, that compromise was not a good enough compromise to simultaneously secure Democrats that needed to vote yes, and some holdout Republicans lead. And so apparently led behind the scenes that issue to trend in a even more restrictive direction that apparently Coinbase and others possibly in the stablecoin sector of the cryptocurrency industry found unpalatable. And when Coinbase pulled its support 5 hours later, Senate Banking Chairman Tim Scott announced that he was postponing the hearing. So we did not get a volatile event like we thought. We thought we might have, in the case of a bipartisan successful vote in that committee, a very positive volatile reaction, spot up, vol up. In the case of a hearing that goes forth where the vote fails, possibly a very negative reaction, but nonetheless volatile. We kind of got the most kick the can version, which is let's postpone the hearing, let the two sides on the issue go back to their corners, relax, try to figure out a new path forward. And then at some still undetermined date, we will apparently try again for a hearing. Tim Scott has not announced a date for that hearing. I think, remain optimistic that a vote will get done and a compromise that is palatable to all sides will get reached. But anyway, this Coinbase really threw a wrench in this thing by publicly pulling their support. And right now on Monday, as we record, the Senate is in recess this week. So the earliest possible dates for a new hearing is next week. So January 26th to January 30th. The Senate Agriculture Committee is supposed to have their version of the hearing on Tuesday, January 27th. So currently, no matter what, we're going to get some hearing, although the Ag Committee's hearing is seen as, essential but less important and less instructive than the Senate Banking Committee. All this to say that this is a very complicated bill with a lot of competing equities, and some of them hate each other. And, this has been sort of like herding cats. So, and I should say, even though we said postponement, I said postponement was sort of not that volatile of an outcome. Crypto equities were broadly down in reaction on Thursday and Friday, in reaction. So hopefully we still get there, but now we're sort of in a holding pattern. I think the two sides are probably set to restart some negotiations this week. But it does seem that stablecoin yield is sort of the current impasse that's blocking the bill. There are other issues, by the way, that matter a lot, like we've talked about, but those, I think most people thought those would get fixed, and it didn't see those at least weren't the ones that caused this rupture last week. They may have caused their own rupture anyway, but the one that did was the stablecoin yield. So we sort of wait and see, and I'll stop there.
Alex, I'm curious, like for the banking side, is it better, I guess, like for all the parties, is it better for crypto side? We've talked about this before, that nothing happens on this, legislation. And then from the banking side, like, is it better for them that no legislation actually gets passed, or would that actually be a detriment to them?
Yeah, I think the banks really need some kind of legislation passed, because recall the current status quo is only the language in the Genius Act. So in the consensus is that language only bans an issuer from just straight up airdropping, proceeds or rewards to token holders. And by the way, it's not implemented yet. I mean, so you're just reading the language of the federal law, but you're waiting for the regulators to actually fully clarify what the law means. I would say that the status quo is mostly fine for crypto, including the stablecoin issuers. The issue is one of durability, right? Like, we are going to get, we think, or have gotten even through administrative relief from the agencies or interpretive guidance, most of what the industry wants, but that's much easier to roll back in the future. And so, yeah, including these restrictions on stablecoin rewards and getting that into law would be a very positive outcome for the banks. I think the banks really do need something passed here. Otherwise, they're going to see a bunch of creative forms of rewards. So that's a great question, because I do think the banks have an incentive here to get back to the table, which is positive for the likelihood of the bill. But I will just say they are arguing that if you pay yield to stablecoin holders, the product will be so good for consumers that it will threaten the banking system. That's what they're arguing. There is, even that assumption is in dispute. So there's been a study I cited from Cornell that says fears of deposit flight due to high quality stablecoin offerings are overblown. And if you just think about it, there's tons of yield bearing products in the market. Like, anyone with a chunk of cash is not sitting in a checking account already. So like, to me, it's not. I think there's a little bit of overhyping of the fear of deposit flight by the banking side.
And Alex, do you think that this kind of given into like the banking side from the crypto clarity bill has anything to do with the negotiating power of the 10% interest rate cap that was talked about or discussed about a few weeks ago? Like, is this a tension between the two, and are politicians trying to navigate between the tension?
Yeah, the credit card APR freeze cap, I think, is an important issue. Definitely a big one for banks. I'm not quite sure if that's to the extent that that's coloring their position on the stablecoin rewards issue, but it is creating urgency for the banks, because that's another huge source of revenue for them. And it's also creating urgency in Congress, because this is one of the reasons why advocates for this bill are so insistent that something get done now. It's not just the calendar. It's not just the midterms. It's not just how scarce Senate floor time is generally. There are other issues that are going to bog down the Senate, such as the credit card APR issue, tariff issues. And so it is creating urgency among the stakeholders to get a deal done. It's contributing to that urgency.
And where does the DeFi issue stand?
Yeah.
Have we cleared that, or are we going to work through the stablecoin stuff and then we'll just hit a similar wall on DeFi?
Yeah, I think this is the most important set of issues in the bill, personally. How to ensure that non-custodial devs are not treated like banks when they have no functional ability to control user funds. So if you think about like truly decentralized DeFi, or even just open source software that is financial in nature, those were pretty well protected in the bill as early as the Monday last week discussion draft. So you had the Blockchain Regulatory Certainty Act, which protects developers. You had a redefining or clarifying of 18 USC 1960, Section 501, which is the money transmission definition, which clarified that in order to be required to register as a money transmitter, you, the entity, needed to have control over user funds. Both of those seen as very positive. There were some concessions made on DeFi, like on front ends, which effectively, if they're controlled by a company, then they would have to do certain things like OFAC sanction blocking. To be clear, like if you're an American citizen, that's already the law, to be clear, right? If you run a website that does anything that helps any sanctioned entity, you're in violation of US sanctions law. So I think it was in a pretty good spot. My sense had been that it was gonna be okay, and I hadn't seen, there were some amendments suggested or filed to the bill that would strip some of those protections, but it wasn't obvious that those would pass, and so I think the DeFi issue was mostly okay. Now we wait. And I think if we're lucky, we'll get another hearing scheduled and more progress will be made, and we'll kind of run it back. We'll run back the whole discussion and sausage making of that bill again for the market. All right, up next, World Liberty Financial, the DeFi app, and I guess stablecoin issuer affiliated with the Trump family. They were going to launch their much anticipated, long-awaited DeFi app using Aave, the on-chain lending leader. But sort of at the last minute here, they've instead launched with a different app called Dolomite. What is the story here, Zach? You wrote about it in last week's newsletter.
Yeah, we've covered this story, I think, from start to finish. But it really started last October when the World Liberty team posted a temperature check proposal in Aave governance, effectively signaling their intent to use Aave technology to power their future lending application. Aave community was very excited about it. They passed a vote. World Liberty community did the same and ratified a similar vote on their end. So both sides are kind of mutually in agreement that this is something they wanted to do. The one caveat is it was all off-chain snapshot voting. So there was actually no legally binding authority that said, like, everybody voted, we have to go do this. And then over time, the relationship between the two sides seemed to just decay, particularly around the World Liberty token launch in August, September of last year. So August, September 25. At that point, there was just rumors that the World Liberty team was saying the terms of the deal were fake news and that it was effectively off. And then it kind of went quiet for a while. And then we got the announcement last week that they announced, or that they launched World Liberty markets using Dolomite as their backend. So yeah, I guess the whole story is put to rest now. They're not using Aave. But yeah, the market's actually pretty large. It's up to 150 million TVL from about 60 when we wrote about it last week, with $127 million worth of USD1, which is World Liberty stablecoin. So actually, like, pretty impressive growth for just being live for about a week.
A lot of this growth though is probably right, like anticipation over farming incentives and things like that, right? Instead of like, maybe super sticky, although maybe it'll be effective in keeping it on the platform for longer. Like, do you think this is a material hit to Aave in terms of like their business? Because, relative to Aave's total assets, this is pretty small, correct?
Yeah, I mean, like, that's like ultimately what it comes down to. Like, they had like a decent token deal with World Liberty. I think it was like 7% of the supply. I don't know quite where Wolfie is right now, but at the time of launch, like, it was a material amount of money that they could have used to incentivize use of both Aave and the theoretical World Liberty Aave instance. But like, again, 150 million TVL with 35 million in borrows, like, that's pretty tiny by Aave standards. So in terms of like the revenue that they could have earned, I actually think it's pretty small. Not to say that World Liberty can't grow into like a multi-billion-dollar protocol in the future, but as of right now, yeah, it's still quite small.
And was there a reason why they chose to go with Dolomite instead of Aave?
I actually don't know. Yeah, I didn't really look into it, and I honestly wasn't expecting them to use Dolomite or like any other provider. I thought maybe they would go just kind of like build it off on their own. And not that at least I could recall right now that there was like any inkling of information that would say like, oh, they're going to go pivot to somebody else at the time. So yeah, kind of an interesting switch.
Yeah, I think there's the speculation I've seen is like, one, the CTO I think of Dolomite is or no, the founder of Dolomite is the CTO at Wolfie, so there's like a clear connection between the two companies there. And then I think the other thing for Wolfie is I think they're also launching their own like front end, and so I think they might just be using Dolo as the back end for that in the future, and maybe for them, it kind of does it doesn't matter if they're using Aave or Dolo, then they just kind of probably want one where they can get the best deal. But, we've seen this historically, like BD in crypto is like incredibly important, not just in terms of, it used to be, I think, just in terms of like announcement and brand value, which is definitely big here. Obviously, this is a material relationship, but also just in terms of like being a growth of actual uses and business driver. And so I think that's what's playing out.
All right. Well, it never ceases to be exciting. I guess, big thing for crypto was they were going to get a big Wolfie allocation, right? Aave. Maybe that's one of the biggest losses.
Yeah, I mean, it's not like they were just like kind of like free to just like sell all the tokens, convert it into like stable coins and like hold it on the DAO's balance sheet. But like, nonetheless, having a ton of money to be able to spend on incentive programs and user acquisition and whatever else is like a very meaningful thing, especially in crypto. Like, essentially how much you could pay out in incentives is usually a good gauge of how much use you'll get. So yeah, on that front, it's a pretty meaningful hit. But in terms of like the long run revenue opportunity, I think it's still kind of unclear, like how big Wolfie will actually get.
All right, well, let's talk about another change in partnership, or I guess new partnership. You had a great title for this story, Lucas, in last week's newsletter. Bitmine goes beast mode. Bitmine Immersion Technologies, which is the largest owner of ETH, I think, in the world, or certainly the largest DAT owner of ETH. Recall that Tom Lee is the chairman of Bitmine. They announced a $200 million equity investment in Beast Industries, which is the company associated with MrBeast, the largest content creator in the world. What is this story? Surely they're meant to be buying ETH with that money.
Yeah. I think this came as a big surprise to a lot of people in terms of this announcement. Like I myself was not expecting a headline like this, and it's pretty shocking. But I think when you dig a little bit deeper, and also after we wrote the article, so Thursday late in the day, they hosted the annual shareholders meeting for Bitmine. Tom Lee kind of provided a little bit more rationale for why they're doing it, and so. Basically Bitmine's thesis is like ETH is going to be the future of finance. And as the largest corporate shareholder of ETH and also a digital asset treasury company, they're not an ETF, right? So Bitmine have kind of a mandate to generate excess shareholder value beyond just holding Ethereum. And so by investing in Beast, how Tom Lee kind of argued why it was worth it, he was like, it achieves two goals for them. First off, like he's just like, this is a really solid investment. Like MrBeast, he's the most popular content creator in the world. Like they think the value of Beast Industries from here is like another 10x. And Bitmine has like a sliver in their investment mandate where they can invest 5% of their total holdings into what they call moonshot investments. And so from purely just an investment standpoint, he's like, this is a great way to increase the value of our holdings beyond just holding ETH. But the other aspect here is like they view Ethereum as the future the future of finance and where all finance is going to happen on the future. And so they want, the biggest, most influential content producer in the world to be developing on Ethereum. And so by investing in them and kind of building this partnership, it greatly increases the chance that Beast Industries, which has actually hinted that it's going to be rolling out a financial product suite, including some crypto products, build on ETH, and they bring a massive consumer user base to Ethereum blockchain. So I think ultimately that is kind of how they're positioning and how they're thinking about it. Like you said, Alex, I think for investors, there's definitely the question like, all right, should we be using $200 million to invest in others, or should we just be buying Ethereum? One notable thing here is like Bitmine, they want to acquire 5% of Ethereum's supply, which is I think like 5.2 million ETH. They're already at, I think, like 4.6 million ETH. And when they originally launched, they said it was going to take them 5 years. In 7 months, they've already gotten to nearly 70% of their stated target. So I think they also have the kind of the view like, hey, we're way ahead of where we want to be in terms of being allocated to ETH. And so this is like a way for us to kind of use all this excess cash in the meantime to generate other value. It's not the first time they've done this. They've also invested in kind of a WorldCoin company. But yeah, so that's where it kind of comes out. It's definitely quite a clash of worlds. You've got Tom Lee, who's like the leading, I would say, like retail investment spokesperson, and you've got the biggest content and like YouTuber in the world together, which could be quite a powerful force.
So when you talk about like the retail distribution, are we talking that Beast Industries might bring to Bitmine or Ethereum? Are you talking about solely like marketing ETH, or is there some expectation that, he's going to launch a creator coin or do SocialFi with his thing or use ETH in some way? Do we have any, certainty on that?
Yeah, so we don't have certainty on it, and Tom Lee was very specific in saying it's going to be up to Beast Industries to decide how they leverage the platform. In an interview before the annual shareholders meeting, Tom Lee talked about possibilities of, them using it for like loyalty reward points, or if they want to issue like an NFT or something, or, like MrBeast has hinted at kind of launching like a neobank like product. So, maybe the actual like custodying of like financial assets and things like that for its customers and using it as the back end for their neobank. But none of that is confirmed. I will say in the shareholders meeting, Tom Lee actually gave a much different example, which to me was a little surprising actually, because I think those first ones are more compelling for why the partnership makes sense. He basically said it's like a marketing tool for them. And so the example he gave was, he was like, well, now that we're partners, like MrBeast has this like survival show, and we can now sponsor episodes of that show, and that'll be great marketing for Ethereum. So I think there's the marketing angle, and then there's the actual use case angle. We really don't know where it's going to go. And if you read online, actually, like I was in the Reddit posts afterwards, like looking at what people were saying, like I will say, like this isn't the best sample size, but like shareholders were not very happy with how the annual shareholder meeting went in general. Like the big thing going into the shareholder meeting was this proposal 2, which basically was going to enable Bitmine to increase the amount of shares they could issue to buy ETH from 500 million to 50 billion. And basically, the idea is like by doing that, they never have to have a vote like this. During the public presentation of the shareholders meeting, there was not one mention of that vote, what happened with it, where it is. And so people are like, what's going on? And there still hasn't been any official press release on whether or not it passed. There's been some articles saying it did, but like until we have official clarity, it's a little bit questionable. Also, going into the meeting on, I think Wednesday or Tuesday, Tom Lee said that Vitalik and Sam Altman were going to be presenting at the shareholders meeting, and neither of them showed up. And instead, they did an interview with the CEO of Lighter. So a lot of people were like, why even like, and I was like, maybe they misread it, but I went and watched the video clip. Like Tom Lee literally is on a South Korean news outlet talking about it. He's like, yep, Vitalik's going to be there. Sam Altman's coming. And everyone's like, so what happened? And there's been no clarity, nothing at all since then.
It's kind of interesting. Well, I guess 2 things. Like one, Tom Lee mentioning like the marketing angle for Ethereum. I'm assuming he means marketing Ethereum or maybe marketing Bitmine to the extent that he can. But like usually that's been like the jobs of the foundations, like going and getting like ad space in a baseball stadium or like whatever it might be. So it's kind of interesting to see Bitmine kind of taking the early steps of like, oh, we're going to start marketing this thing and kind of take on at least some of the responsibility of a foundation. But 2, I also think it kind of highlights that general purpose, like blockchain DATs kind of have alternative ways of making accretive investments to their core like crypto position. Like if you have like a big bag of ETH and you could convince MrBeast to start like a SocialFi app or use ETH as the back end for his internet bank or whatever he's trying to build, you kind of are making like an alternative bet on something that is accretive to your core position. And I think that's like a differentiating factor that these kinds of DATs have against the Bitcoin ones, where it seems to be like less financial engineering and maybe more like, hey, we could invest in MrBeast and move the price of ETH maybe in the long run. So yeah, I think it's all kind of interesting.
Yeah, and they I actually, one of the questions he got was like, all right, if you guys get to 5%, because they're on track to reach their 5% target this year, basically. And somebody was like, so if you get to 5%, are you going to go to 10% after 15%? And he basically said, we'll see when we get there. But for us, like the reason 5% is important is we think that is kind of like the amount of ETH we need to really have like a seat at the table and be influential in terms of growing ETH. He's like, and this deal with Beast Industries and is an example of that, because we hold so much ETH, they view us as a viable partner to help actually onboard them onto the ETH ecosystem and make sure that like they can do what they want. And he says once we get above 5%, he's like, we actually might become, he called them literally a malevolent actor, saying basically at that point we might actually own too much and be viewed as almost a threat to the network. The other analogy that I think he put forward that was interesting is he was like, if you're 7 feet tall, do you want to just clean gutters or do you want to go play in the NBA? And he was like, with 5% of ETH, we're like that 7-foot tall person. And we're not here to clean gutters. We're here to go play in the NBA. And so they definitely have big ambitions. I think there's going to be a lot more of these kind of moonshot announcements coming out. Like I said, they had the CEO of Lighter on, and they definitely hinted at partnership announcements coming up with them in the future. And they're going to be launching this kind of like made in America validator network called Maven, which they didn't want to release many details, but should be announced. More details should be announced in the next few months.
And it sounds to me it's like a whole messy marketing positioning situation, which maybe signals that they don't know the clear path that they want to do. And it's kind of contradictory because you see like Tom Lee being the perma bull saying that ETH is going to go to some like crazy price target. And meanwhile, instead of just holding ETH, and thinking that's like the best asset that you can buy, you're going into another kind of a foreign area of venture with MrBeast. So I like personally, if I was a shareholder, I would not like the decision of what the firm did, because what I bought into is like Eve dad, and now they're using all this language and marketing hype to say that maybe like we are the only way that we can hype the Eve price up, and therefore your share is gonna appreciate. But who knows like what this opens the gate to? Like could be like more and more like further away investment they can do that's maybe less related to Eve. So I think it's a tricky situation that they got themselves in.
I agree, but I also think, like we've been talking about many others, that DATs need to find some, expanded business model that makes it more possible for them to generate revenue. And if this, if Beast Industries equity is seen as relatively downside protected, then really he's just parking some cash in something he thinks can, it has moonshot upside. I don't necessarily mean, I think it was valued at at 5 billion already. I don't even necessarily mean the equity value of MrBeast, which, I mean, to be honest, right, isn't there like significant key man risk here? Probably, like if Jimmy Donaldson is no longer making videos, like will the equity be worthwhile? But it does perhaps have Ethereum onboarding or marketing moonshot capability. And one example I'll give, I expect to see this video from MrBeast. Post haste, we forced one person to live off Ethereum only for 100 days, and if they don't get $1 million. They got to pay all their own gas fees. They got to, we're gonna lock them in a supermarket. All right, and the trick is they can eat as much as they want, but they have to spend Ethereum to do it. And if they do it, we'll give them $1 million. That would be a video that I think. Do you think we're going to see a video like that? I mean, that's pretty simple. It's pretty simple idea.
We got to tweet this at MrBeast afterwards and get it on his radar. That's a great idea.
All right, we'll wait and see. I mean, I think in Tom Lee's and Bitmine's defense, they did specifically allocate a bucket for capital for weird stuff. But I agree. I thought I saw around the new year, whether it was a leak or something, reported internal fund strat memo saying they expect ETH to go lower before it goes higher. So also perhaps he's sitting on this cash saying, well, wait a sec, maybe now's not the best time to buy ETH. Maybe I'll be able to get it for cheaper sometime in 2026. Let's go on to our last story here. John Ning, you're going to update this. We didn't cover this in the newsletter. I think it kind of came out slightly after. Jefferies, the investment bank, among many other things that they do, they have some model portfolios. And in one of them, they had a 10% Bitcoin recommended allocation, but they have now swapped out that 10% for gold under the premise that perhaps Bitcoin is at risk from quantum computing. What is the story, Johnny?
Yeah, so goes back, the model portfolio goes back to 2020 during the COVID pandemic, when the head of global equities at Jefferies started allocating Bitcoin to the portfolio, saying that is due to scarcity, is good store of value. So at that time, I think he put a small allocation to it, but then in 2021, he increased allocation to 10%. And the allocation stayed 10% throughout the past 5 years. So late last week, he announced that he's going to swap the 10% Bitcoin allocation to 5% gold exposure and 5% in gold mining stocks, and citing that the quantum risk. And he said, although it's not imminent risk, still it hurts Bitcoin's profile as a long-term pension suitable investment. So that's what he said. And the discussion of whether quantum is a break Bitcoin has been in place for like the past 5 years. I think is recently gaining traction due to Nick Carter's blog on it. And we actually have a bunch of investors on the asset management side that reach out to us and say like, hey, what's your view on this? So this is a very interesting place where we're navigating like whether is a price in for Bitcoin already? What's the real risk there? Is a solution on the way to be developed, and how big of a threat can quantum be to Bitcoin's price?
Yeah, I mean, this is actually something that also came up during the Bitmine presentation. Is somebody literally asked, like, what's the risk of quantum? And so I definitely think it's on everyone's minds right now. I think for Bitcoin, I mean, Alex, correct me if I'm wrong, but the big risk is like the threat of old wallets, right? That old wallets that haven't been touched, which could potentially be hacked. And that's like a very attractive attack vector for people to kind of just access those wallets and dump them immediately. And I think it's also something that we're seeing extend beyond just Bitcoin, like Ethereum discussion boards, Solana discussion boards. There's a lot of discussions on like, all right, what are the updates we need to make these blockchains quantum resistant? The real kind of divergence in opinion seems to be between those who think this is an imminent threat and those who think there's quite a lot of time before it actually plays out.
Yeah, the risk, the primary risk is elliptic curve cryptography. So a cryptographically relevant quantum computer, meaning one that can be harnessed to run Shor's algorithm and brute force attack the elliptic curve crypto that most blockchains use, really for securing assets. It's the risk that emerges, right? And it takes you down a bunch of paths when you think about it, and what that risk would actually look like. But I think in Bitcoin, a good example is, yes, it is the majority of the coins that are at risk are old coins, but it's not because they're old. It's because they sit in addresses whose public addresses are actually the public key side of their asymmetric key pair. So bare public keys, or pay to public key, P2PK, which is a deprecated address format, but one that, for example, Satoshi's coins, if they exist, all use. And so, but keep in mind also, when you broadcast a Bitcoin transaction to be included in a block and settled on the network, you have to reveal your public key, even if you're storing them unmoving in what would otherwise be a quantum resistant address format. So there is an issue with, because you can imagine that if quantum computing does become cryptographically relevant, well, yeah, at first it might be able to break an ECDSA, key pair in a year. But once it's possible, you assume that year becomes a month, becomes a day, becomes a minute pretty fast. And so there's this like short range attack where even if you're in a taproot address or a segroot address or a shielded address, when you go to spend, just gets seen in the mempool and gets instantly replaced by a higher fee. Your key cracked immediately, right? So it's not just old coins. It's also, and by the way, the other category is any addresses that have been reused, because you have to show your public key when you spend. If you reuse the same address, you'll have already revealed it. That's in some prior. So like exchange deposit addresses, they reuse them all the time, right? So there are more. It's more than just very old coins, and it's more than just Satoshi's coins. And frankly, to formally and finally solve this, if it is a problem, you'd need a new key signing schema, like an entire new sort of way of how Bitcoin transaction signing works. My issue with this overall is, I think it is a tail risk. I think I'm not certain that it's going to be a risk. I don't think it's guaranteed to be a risk, but I do think it's possible that it is a risk. And thus, I agree with some, such as my friend Nick Carter, that it should be worked on. Where I disagree is that Nick is saying that it's not being worked on, and I just totally disagree with that. I went to a major conference in July, packed with most of the top Bitcoin developers, solely focused on this. There's tons of activity on the mailing list about this, and devs are thinking about this. There is a Bitcoin improvement proposal that was just updated that has one way to possibly solve this. I actually see more activity in the Bitcoin world than in most of the other altcoin dev spaces. And to the extent that they're working on it better than Bitcoin, I would contend it's because their developer ecosystems are much more centralized than Bitcoin. So I think it could be a risk, and thus it is worth working on. I do think there is a dynamic here of a little bit of urgency that might be overblown, I think, in the near term. But nonetheless, I agree we should work on it. I don't believe for a second that the reason not to own Bitcoin or buy Bitcoin today is because of quantum risk. By the way, there's plenty of other reasons, like the fact that it can't seem to be used as a hedging asset at the moment the way gold is, which would be better reasons not to, to be near-term bearish on it than quantum. Wait, has anyone seen like other communities? I mean, think, Lucas, you said this was brought up in the Bitmine meeting. I mean, are Solana devs talking about this? Ethereum devs? Because one thing to be clear, Ethereum's significantly more vulnerable than Bitcoin. Almost every address is reused all the time. I would argue that probably easier to upgrade Ethereum than Bitcoin, seeing as how they have regularly performed a hard fork of the network, say almost every 6 months for the last 8 years. It's never been opposed by the user base. So they could probably push through any upgrade much more easily than Bitcoiners could. But I haven't seen a lot of discussion about this elsewhere either. I mean, discussion, but not like, I don't know what level of planning outside observers are looking to see. I don't feel like I've seen that much more outside the Bitcoin community.
I think like you said, I think basically like there's in early discussions happening in these communities, for the Solana community specifically, I can say like there's been like specific proposals that have surfaced and research saying like how they can make the network more quantum resistant. There has not been like a lot of traction in terms of trying to formally implement these things. There has been like some experimenting and actually like trying them on testnet and things like that. But I think, like you said, like I would agree the view why I think they're not brought up as much is, first, they're not like as critical an asset to the crypto industry as Bitcoin. Obviously, like if something happens to Bitcoin, the knock-on effects would be huge. And also, yes, like these are upgradable networks that are constantly being developed and upgraded. And like they're, for some of them, for something like Solana, it's actually like the more they ossifies, to some extent, they lose their competitive advantage. Whereas for Bitcoin, like its ossification is kind of a key value proposition.
Yeah, I've seen Vitalik put out a blog talking about quantum resistant solutions to Ethereum recently. So I think they have paid attention to the problem and are looking to develop a solution on Ethereum side of things.
Yeah, I think that's the state of play in Bitcoin as well. It's just there are plenty of smart people working on it. There is not, critics or those raising the urgency here of quantum, they're not wrong. There is no currently agreed upon path to solve it, but I don't think that's unique in Bitcoin. And I asked Michael Saylor about this in my interview with him in December, and he basically was like, guys, come on, they're going to fix it. Let's not stress about this, and I don't think Bitcoiners should be complacent about it, but I do agree with, and in fact, the opposite. I think they should be actively working on it. But I do agree with, like, if we just guess probabilities, do we really think that whether it's reluctance to fork or change the algorithm or whatever, that Bitcoiners would rather see it go to zero than solve an existential threat if and when it becomes clear that it's existential? Like, and I think there is a risk, that there is a risk that they don't solve it fast enough, that we get Q day, as they call it, is sprung upon us too quickly, and we don't yet have a solution. So I'm all for Bitcoiners and Bitcoin developers working on this. I don't think that like intransigence or the desire for ossification is going to prevent it from being done. And I do see it being worked on. So I'm not quite clear where the fear is coming from. But nonetheless, agree that it should be worked on, So I think some of this is overblown, at least for now, but I am heartened by the fact that, I was at a meeting, and there'll be another one alongside the Bitcoin conference in April in Vegas, another big meeting about this and in the interim, it's being worked on. So like these meetings serve as like the forcing functions to present new ideas, to gather consensus. I see it being worked on. So
yeah, but I think where I push back there, Alex, is I think it's not so much that it's not that they won't come up with a solution. It's that there won't be agreement on which solution to implement, right? Like I think that is the risk ultimately.
Yeah, but I think this is my point though, that like if it becomes urgent, like surely something will be implemented.
Yeah.
They're not going to let their coins go to zero.
But people will disagree, right? Because any solution could impact the value of other people's coins relative, like some people's view of what the value of the coins is versus others. Like I do think that is a really difficult challenge, right? Like,
but how is that a bigger deal than with other networks?
They're all going to face. For sure. Yeah.
Well, this is what I'm saying, though, is like why. I mean, don't get me wrong. If quantum is here to destroy all cryptography, or if UAP disclosure happens and we find out that sub-oceanic aliens have unlimited energy, yeah, that might be bearish for energy secured coins, right? Or cryptographic secured coins. Maybe you do want to own gold in that spot. I just think here, like, and it's not just Jefferies. I see a thing here on the terminal right now. Why one strategist is exiting Bitcoin for gold. I think you're in like the late stages of a gold rally in terms of narrative. I don't mean it can't go higher. I think it's been going higher for 2,000 years. But I'm just saying, like, it's pretty hype-driven train to be in January 26th, the year of the horse, and still saying, with Bitcoin down 30+% from all-time high and gold up almost 70% year over year, still saying you're dumping Bitcoin for gold. Surely at some point, like, people are just looking for reasons to say they want to sell Bitcoin for gold. Surely at some point Bitcoin will look undervalued and you'll see a rally, and that rally will occur in the face of uncertainty about quantum, among other things, in my view.
Well, the year of the horse is expected to signify a high-speed transition from theoretical experimentation to practical, commercial, and hybrid quantum classical applications. So,
oh wow,
we should be careful.
Okay. All right. Well, before we wrap, what else, if anything, are people watching for the rest of this week?
AGI 2.0 is happening on Solana, and we're seeing a lot of developers come to Solana and basically use tokens as a way to fundraise for their projects, but it is raising a lot of issues because those tokens don't necessarily imbue ownership rights, even if they're an advancement of what we saw previously with AI season. And so I think we've seen basically a lot of tokens rise meteorically and go to zero, and it's just, I think, continuing to accelerate this debate that we have on here all the time, which is, what are the rights a token actually imbue with you, and how should those rights be given to the owners?
And last week, we had the largest ETF inflow of digital assets in the US of like around $2 billion since October's liquidation event. So continue to monitor if the flows will come in this week among all of these geopolitical tensions that's happening, and how Bitcoin and ETH and Solana prices will behave.
Yeah, and I got a couple things going on. Doing a follow-up report on impact markets. We've covered decision markets and prediction markets like relatively extensively over the last year, so just kind of expanding on this newer frontier of what that stuff kind of looks like. And then, starting to work on our quarterly lending report. So we'll see what kind of the lending world has looked like in the face of the 1010 liquidation stuff and just like yield compression on chain. So it'll be interesting to see how that all pans out.
I also will be watching ETF flows. I love you pointed that out, John. Quite bullish flows last week, and mostly in Bitcoin. Like 1.6 of that 2 was Bitcoin, which obviously makes sense. I still continue to wonder if it still feels like there is a disconnect, certainly between crypto Twitter and institutional, but perhaps retail and institutional. Jefferies aside, I see significant interest from institutions to own Bitcoin. You can sort of see that reflected in the ETFs, which obviously are more they're not all institutional. There's plenty of retail there too, but there is a lot of institutional there. So I wonder, right, because the total inflows is only down like aggregate 8% or so from its all-time high, even though Bitcoin is trading 30% down from its all-time high. So I watch that, and then obviously any updates from Washington about any of these negotiations. If they occur, I assure you I'll tweet about them or write about them, and you will know. So that's it for this week's episode of Galaxy Grid. Thank you to John Ning Wu, Zach Pokorny, and Lucas Chayan, and we will see you all next week. Have a great week.